What's up, everybody? It's Johnny, and I'm back today to talk about the child tax credit. As you know, I'm a CPA, and never in my life have I seen so much talk and confusion about a tax credit. I am here today to try to clear up that confusion. In today's video, I'm breaking it all down. To keep things clear, concise, and easy to follow, I'm breaking this video down into 3 parts. In part 1, I'm going to quickly define what a tax credit is and how tax credits work. We can't get into the child tax credit and truly understand it if we don't know the basics. In part 2, I'm going to specifically talk about the child tax credit. I'm going to discuss the following: when to expect the final monthly payment, will there be monthly payments in the year 2022, and who's eligible for payments and how much to expect per payment. And finally, in part 3, the most important part of this entire video, I am going to talk about the child tax credit and how it impacts taxes. Tax season will be here in no time, and if you received a monthly child tax credit payment, you better know what a letter 6419 is. If you don't know what a letter 6419 is, stay tuned because you will need it for your taxes, especially if you want your taxes to be processed as fast as possible if you got a refund. Before I dive into part 1 of the video, I just want to quickly say thank you so much for watching and click that subscribe button so you do not miss out on the next update. Alright, here we go. Let's dive into part 1 of the video. Let's quickly understand what a tax credit is. A tax credit and a tax deduction are commonly misunderstood and are considered the same thing. However, they are much different. A tax credit is a dollar-for-dollar reduction of income tax that you owe. A tax deduction reduces the amount of income subject to tax. Let's use a quick example to explain. Alright guys, so let's use the whiteboard. Let's bring the whiteboard back out to further explain this and provide clarity on the issue. Okay, so I have 2 scenarios here on the whiteboard. So in each scenario, there's $10,000 of income. Okay, in both scenarios, it's a 10% tax rate. The only difference between scenario 1 and scenario 2 is in scenario 1, we're dealing with a $1,000 tax deduction, and in scenario 2, we're dealing with a $1,000 tax credit. Now, as you can see, there's a big difference between a $1,000 tax deduction and a $1,000 tax credit. So let's walk through each scenario. Scenario 1, you have $10,000 in taxable income, less the $1,000 tax deduction. Comes out to $9,000 taxable at 10%, you're left with a $900 tax. In scenario 2, we see the difference between a tax deduction and a tax credit. In scenario 2, you have $10,000 of income times a 10% tax rate equals a $1,000 tax, less the $1,000 credit, you're left with 0. Okay, no tax owed. So as you can see, there is a big difference between a tax credit and a tax deduction. Okay, so at this point, now we understand the difference between a tax credit and a tax deduction. Now that we know the basics, we can get into the details. Okay, time for part 2 of the video. Let's break down this child tax credit situation. This was a big week as the 6th and possibly final monthly payment from the child tax credit hit on December 15th. Most receive this payment through direct deposit, but some will receive it in the mail, so it may come over the next few days. So, what was the monthly child tax credit payment for? Basically, the child tax credit monthly payments were in advance of the child tax credit, which is normally just claimed when you file your tax return. The plan of the monthly payments was to distribute half of the benefit through the monthly payments and then the other half upon filing of the tax return. The whole reason for this was that the benefit of the monthly payment was to get money in the pocket of those who needed it sooner rather than later. Also, when you file your taxes, just because you get a tax credit does not mean that you will automatically get that money in your pocket. And what I mean by that is when we think about the example that I put on the whiteboard earlier. If the tax exceeds the credit amount, you still owe the tax at the end of the day. So although the credit helped you and reduced your tax amount, you don't actually feel that money in your bank account, and that's a big difference. So what's going on right now? Will these monthly payments stop? Well, Congress is currently debating the Build Back Better Act, which proposes a one-year extension of the monthly payments into 2022. December 28th is a big day. The IRS has reportedly advised lawmakers that for payments to continue as scheduled by January 15th, 2022, the Build Back Better Act must be passed by December 28th. So, in summary, if Congress can't agree, and soon, the monthly advance payments are ending. As a review, I wanted to remind everyone who is eligible for the payments and how much they were for. Eligibility was based on income. To receive full payments, if you filed single, your adjusted gross income had to be less than $95,000 and $170,000 for joint filers. The full monthly payment for eligible families with children under 6 is $300 per child, and ages 6 to 17 is $250 per child. It is possible that some parents might receive even more in one payment if they missed a prior month payment and registered for payments prior to the November 15th cutoff. So let's wrap up part 2 of this video. If the Build Back Better Act is not passed, the monthly checks have ended on December 15th. However, parents can still claim the benefit on 2021 tax returns before the tax filing deadline of April 15th, 2022. It is assumed that if the Build Back Better plan is not passed, the child tax credit will revert back to pre-2021 conditions. And that is $2,000 per child and no monthly advance payments. You claim the credit when you file your taxes. Okay. Now that we're talking about taxes, let's finish with the third, and in my opinion, the most important part of this video. Let's talk about the child tax credit and the impact it may have on tax returns. First, the child tax credit is not considered income. You do not owe taxes on child tax credit payments. It is an advance payment of a credit. However, there is a big issue that I rarely see talked about. The child tax credit monthly payments were based on 2020 income. Most people made less money in 2020 due to the pandemic. Many got back to normal or close to normal in 2021, so 2021 income for most is higher than income in 2020. If your 2021 income was high enough that you are not eligible for the payments, but you got them anyway, the credit will need to be repaid on 2021 tax returns. Okay, in addition to that, let's talk about that letter 6419 that I mentioned early in the beginning of the video. For tax filing, the IRS will be sending a letter 6419 to those who receive child tax credit payments. Expect that letter in the month of January. Joint filers should both get their own individual letter. Keep the letter in a safe place and refer to it when you do your taxes. The details in the letter will help you report your payments correctly and help you claim the other half of the credit. Remember all of those tax refund delays this year? No one likes waiting for a refund. If you want to avoid this, it is critically important to follow the details on this letter. The letter is basically a tax form that will show you the total amount of the advanced child tax credit payments you received and the number of qualifying children counted in determining the advanced monthly payments. If you do not use this and enter the wrong numbers, it can mess up the tax return. If you are watching this video and think you lost your letter or can't find it, have no fear. You can use the IRS Child Tax Credit Portal, which is in the link below. Okay, everybody, this was a lot of information, and that's all I have for today. Thank you so much for watching, and as always, stay sane, stay healthy, and I cannot wait to see you all soon.